Hey, welcome back everybody to Altcoin Daily. Our interview guest today is Pierre Rochard. He is a software engineer by trade, the co-founder of the Satoshi Nakamoto Institute, an outspoken Bitcoiner in the space. He holds degrees in business administration and accounting from the University of Texas at Austin. He co-produces the Noted Bitcoin podcast with his colleague Michael Goldstein, aka Bitstein, and he is a Bitcoin strategist over at Kraken. Pierre, how are you doing today?
Very well. How are you? Thanks for having me on.
Thank you so much for coming on, man. Great to have you. I want to talk about Bitcoin, obviously. Later, I want to get into Ethereum. Did I get your bio right, by the way?
Yeah, although I think you mentioned that I got an MBA, right? It's not an MBA. It's a master's in accounting, which is subtly different, and I feel like it's better, but we can debate that too.
Right. If there's anybody who can run the numbers, it's this guy right here. What takes up most of your time? Is it working at Kraken? Is it the Noted podcast?
Unfortunately, Noted has been very lacking, although Michael and I are recording an episode tomorrow, so that's coming back. So yes, mostly Kraken, education, educating folks internally and externally about Bitcoin, and yeah, exploring new opportunities, right?
Exactly. So let's get into it. Let's just start off big picture. How bullish are you on Bitcoin?
Extremely. Both short term. I used to say short term I'm bearish, right? Because we were in a bear market. But now short term I'm bullish. Obviously, I think that we are heading towards an all-time high, maybe this year, maybe this month, maybe next week. And so that's very bullish. And then medium and long term, I'm only more bullish, right? I think that medium term, there are giant improvements happening to the Bitcoin protocol. We've got Taproot on its way, which you could kind of think of as Bitcoin 2.0, right? Because it is fundamentally overhauling the scripting language in Bitcoin and enabling new functionality. And then layer 2 scaling with Lightning is also huge and has been under development for a while and is really going to benefit from upgrades on the base chain with Taproot. So I think that, on the technology side, medium term, very bullish. And then long term, also, I think the long-term concern with Bitcoin always comes back to transaction fees. And I think that we're starting to see a little more fee pressure, but in this bull market, we're really going to be able to prove out the economics of a Bitcoin blockchain driven by transaction fees instead of being driven by new creation of Bitcoin.
Interesting. And I think most of our audience understands the Lightning Network. As far as Taproot goes, from the best of my understanding, it's going to make Bitcoin's network a little bit more private, a little bit more scalable, a little bit more smart contracts, all while making sure that the base layer stays decentralized. How would you describe it?
Yeah, I think you hit the nail on the head. Although I would argue that it's not a little bit. I think it's a lot. I think it's a lot smarter for the contracts. For example, there's this concept of discrete log contracts and oracles. And you can kind of, if you're familiar with Chainlink and their marketing, it's the same concept, right, of bringing in external data into the world of blockchain in order to automate the transfer of coins. And so, for example, you could bet on whether Trump or Biden is going to win the election, or you could bet on what the Bitcoin price is going to be. And the outcome of the bet is trust minimized. So you don't have to trust someone to hold your coins, right, while the bet is being resolved. Instead, it's in an on-chain contract. Now, with Taproot, it's going to be able to be on an off-chain contract. So it's going to be able to be, for example, on Lightning. And so I think that we're going to see a lot of activity of what we consider today to be DeFi exclusively to Ethereum and that ecosystem. I think that we're going to see it spill over into Bitcoin as those capabilities come online.
Interesting, interesting. I want to get into Ethereum, all about Ethereum in just a little bit, but do you think of it, just still big picture, do you think we're in a digital gold rush? A lot of people say this is the greatest wealth shift of our time. What do you think?
I think that, yeah, the greatest shifting of wealth in my mind is going to be from fiat denominated bonds into Bitcoin. And I specifically exclude equities and real estate from that because equities and real estate are going to survive hyper-Bitcoinization, in the sense that for equities, companies are going to start to bring in Bitcoin as revenue. We're already seeing them put their cash into Bitcoin. So they're going to have Bitcoin reserves. So I think that companies that are well run are going to survive hyper Bitcoinization. And then obviously in real estate, houses and buildings, they're still going to be there after Bitcoin takes over. But fiat denominated bonds, their value is entirely dependent on the currency, the underlying currency. And so if the underlying currency goes to zero, then the value of the bonds also goes to zero. And so I think that that's going to be the greatest wealth transfer in the history of humanity. And then also, we shouldn't discount the fact that Bitcoin isn't just going to take wealth away from other assets by demonetizing them. It's also going to create new wealth, right? So it's going to grow the pie. And I think that's something that we're currently not seeing because, we're seeing Bitcoin take market share from others. But ultimately, Bitcoin's going to grow the market as well.
Interesting. And speaking of taking market share right now, like just in this last month, we're seeing massive supply shock on all these exchanges, Bitcoin leaving exchanges. Nobody wants to sell. Have you ever seen something like this before to this degree?
I'd have to look at the on-chain data to see how comparable it is to past cycles. But I think that in terms of the sentiment, there's definitely the view that we're only at the beginning of the bull market and we haven't even hit an all-time high yet. And so combine that with the fact that it's getting easier and easier to self-custody your coins. So it's getting easier and easier to take your coins off of exchanges. So I think that trend's going to amplify. Now, the other part to think about is that if the value of Bitcoin is going up, then the number of coins on exchanges can go down while the total amount of value on the exchange is still going up. And so that's kind of another way to think about it.
Interesting. Yeah. The data I saw was from Glassnode, and I think it's coins, but
I think that's right.
Yeah. And also you mentioned developmentally with Taproot, we're at a very different place than we were 4 years ago. Besides developmentally, how is this bull market cycle maybe different than past bull markets that you've seen?
Yeah, I think that the size of the players is just completely different, and also the kind of intellectual firepower, right? So what I mean by that is that if you look at the investment thesis that Paul Tudor Jones wrote or that Michael Saylor wrote and talks about, their level of understanding of Bitcoin is just far more sophisticated than what we had coming in 2017, but even in 2013 as well. And so when you have billionaires who understand Bitcoin, and part of the reason why that's the case, for example, there's a billionaire out of Mexico who just tweeted out this week that he put 10% of his liquid net worth into Bitcoin because he read the Bitcoin Standard. And so, by Saifedean Ammous. So I think that the amount of educational material out there for people to learn about Bitcoin is unprecedented. And it provides a really easy way for people to kind of bootstrap themselves into being Bitcoiners without having to browse forums on Bitcoin Talk for years.
I would love to know how you first got into Bitcoin. Like, what was your journey discovering it?
Yeah, so I think I have to go back to 2005, long before Bitcoin, well, maybe it already existed as far as we know, right, in Satoshi's computer, but long before it was publicized, because that's when I got interested in libertarian politics, but also Austrian economics. And a key part of Austrian economics is this concept that the reason we have economic cycles, the reason there's macro business cycles, is because of the monetary system. It's not because of human, well, obviously human nature is part of monetary systems, but that if we were to remove human nature from the monetary system, right, which is what I would argue Bitcoin does in a way, that we're able to avoid these cycles. And the reason these boom and bust cycles happen is because new money is being created and then destroyed. And so this can happen under a gold standard, specifically because under a gold standard, it's not that people are using gold as money. What they're using is paper representations of claims on gold. And you can print as many of those paper representations as you want. And so that's kind of what we saw in the booms and busts before we got off the gold standard. And so the Austrians are really, the Austrian school of economics is really unique in that sense of seeing the world this way. All of the other schools of monetary economics, they reject that view. They think that actually paper money can help avoid macroeconomic cycles and that money printing is good for the economy. So already before I had ever, or before anyone had heard about Bitcoin, I was already in the sound money camp. It's just at the time I was saying, oh, you know, we need to have 100% reserve gold. Right, and that we should all just like Peter Schiff, like we should all transact in little pieces of gold, which in hindsight is kind of ridiculous. But anyway, at that time I didn't really understand why paper money had outcompeted gold. I thought it was just that the government had forced paper money onto everyone, and that's why we were using paper money. In fact, it's actually a much more nuanced argument where paper money actually emerged from the free market before governments co-opted it and monopolized it. So in any case, very much into Bitcoin before knowing about Bitcoin. And then when I heard about it, the first time I heard about it, I only heard about it in the context of the Silk Road. And I think this was like 2011. And I already had a drug dealer, so that didn't really appeal to me at all, you know, of going onto the Silk Road and buying drugs like on eBay. And also that I didn't understand that Bitcoin was a finite thing. I thought it was like WoW gold, right? That there's like some kind of issuer who can just create as much of it as they want. I didn't understand the halvings or the difficulty adjustments or the 21 million Bitcoin. So shame on the mainstream media that didn't include that in the article that I read back in 2011. And then I rediscovered it at the end of 2012 as part of the Austrian economics reading group I was in at UT Austin called the Mises Circle, where we were debating these issues of fractional reserve banking and fiat, and Bitcoin came up in that context. And that's when I went down the rabbit hole of like, oh, wow, there's only going to be 21 million. This is definitely going to increase in value. And coincidentally, at that time, it was increasing in value. And so I think that there's an element of luck involved where if you hear about Bitcoin during a bull market, early in a bull market, you're more likely to stick around than if you hear about it at the top and you go all in and you get wrecked, right? So that also factored into me being excited about Bitcoin.
True. True. So, you know, you talk about 21 million. This is something the media doesn't really talk about: Bitcoin scarcity, fixed capped supply. Bitcoin has a bullish future, but most regular people coming into this space today, probably, they might be able to, but probably won't be able to accumulate one whole Bitcoin. Let's just say that somebody can accumulate 0.3 Bitcoin. Do you think that's of any significance?
Well, 0.3 Bitcoin is 30 million Satoshis. So already that person's a millionaire. So I'd say that's of pretty big significance. And really their priority, at that point, your priority isn't so much like how much Bitcoin you own. It's, are you securing it well enough that you're going to be able to carry it into the future when its value is going to dramatically increase? And also, are you going to be able to add to it instead of selling? So, you know, my advice for that person would be, so figure out how to store your Bitcoin securely first. Second, cut your unnecessary expenses, right? So instead of going to Starbucks to get your coffee, maybe make your own coffee, right? Things like that. Downsize your house. Most people own too much house, right? And then, obviously sell your stocks and bonds and put it into Bitcoin. So once that's done, the third thing is to increase your income. So you need to, first of all, you should always be looking for a new job, even if you like your job a lot. The reason being that if you ever want to increase your salary, what you have to do is come to the table with an offer from someone else and say, hey, look, if you don't give me a pay raise, I will go get this job that I already have an offer for. So it's not even a hypothetical, right? I've already got an offer for a greater salary than I'm currently making. And to do that, you've got to be working on your skills. You've got to be, whatever it is, learning to code, learning to be more efficient, learning to communicate better, all of these skills, so that you can earn more or start your own business, and all of that goes into that. And I'm not the expert on that, but there's plenty of books out there on how to increase your income and how to start your own business. And so I think that if you don't own enough Bitcoin, there's lots of solutions out there for you to earn those Bitcoin or to earn the fiat and then convert it into Bitcoin.
I like it. And you live frugally, obviously. You sold your body, I see.
Yeah, that's right. Yeah. Now I've just got the essential worker, right? The head. Now I don't have a body, although I have an arm too.
Oh my gosh.
Yes. The torso, all of my internal organs have been sold on the black market. That's
how dedicated.
Yes.
Pierre, nice. Is there anybody in your immediate circle that is a Bitcoin, they're not a believer? I'm just wondering, you must be the Bitcoin guy among your friends. Is anybody that doesn't quite get it?
Well, not really. I mean, I don't really have any friends outside of Bitcoin.
Nice.
So maybe, one way to look at it is that that's utterly pathetic, right? And that I should have friends outside of Bitcoin. But the reality is that before Bitcoin, I was like friends with libertarians. And so all those libertarians became Bitcoiners. And so what is there for me to do? Yeah, I mean, obviously I know people who are not interested in Bitcoin or skeptical about Bitcoin, but I'm really of the mind that persuading people in my immediate circles about Bitcoin is a much less scalable approach than persuading people on the internet. The odds that I'm going to find someone and flip them on the internet are much greater than the odds of me finding someone in real life and flipping them, right? And that's kind of just self-evident to me that Bitcoin is the money of the internet. So the adoption is going to come from internet users. It's not going to come from going door to door to merchants and telling them, hey, you need to accept Bitcoin at your shoe store, right? That to me is the least scalable, and that might actually just cost more money than in business they talk about customer acquisition costs, and then the lifetime value of the customer, right? What percentage are going to convert into actually buying? So I think that the highest return of, let's call it evangelism, is on the internet, far greater than in real life.
Interesting.
I can see it.
So before we get to Ethereum, I just have a few more random questions on Bitcoin. Feel free to answer as much or as little as you like. A $100,000 Bitcoin cycle top, is that realistic, do you think?
I think that's unrealistic. I think that's way too low. $100,000. I mean, that's a 5x from where we're at basically now. And I think that that's not even really a parabolic top if you were to look at the chart. I think that, well, so did you attach a date to 100K, or did you just say that's the top of the cycle? Because
yeah.
One of my theories is that this cycle is going to be longer than all the past cycles. And so it's going to take us longer to get to the top. maybe we'll have a correction at 100,000, right? And then it'll quote unquote crash down to, 80K. But then I think it's going to make another run. And so I think that the ultimate top for this cycle, it's impossible to know ahead of time. And this is what makes me worried about people trading, is that the top might be 200K, it might be 400K, or it might be 600K. And each one of those is multiples of the other. And so trying to time it, to me, is kind of futile, because we're talking about literally billions, tens of billions, hundreds of billions of dollars flowing into Bitcoin over the next 18 months, or in the next 36 months if we have a very long cycle. So where that moves the price, a lot of it is going to depend on how many coins are actually lost, right? Versus coins that are waiting for a very big price to come onto the market, versus coins that are not going to come onto the market at all, right? Because the owners have a long-term view. A lot of the buyers in this cycle, they're not ever going to sell. So that's the other part, is that if you're a billionaire and you're buying Bitcoin and it goes up 100x, that's still not a life-changing amount. You already had your life-changing amount, right? You're already a billionaire. So these people don't sell. And so it'd be like thinking that, that they might rebalance, but even then, if they understand Bitcoin's value proposition, they understand that there's no reason to rebalance until we're much further in the future, because all of the other markets are dramatically overvalued, right? Stocks and bonds, hugely overvalued if you look at earnings or if you look at yields.
Nice. Austin, any more of these Bitcoin questions before we move forward?
Well, I guess just generally speaking, is there anything in cryptocurrency into this next year that excites you besides Bitcoin?
Well, okay. So, I mean, that's kind of a weird question in my mind, because to me, for example, Lightning is not Bitcoin per se, in the sense that hypothetically, there's a Litecoin Lightning network. I say hypothetically because I don't know that it has any liquidity at all. And so I am excited about Lightning, especially because I think on-chain transaction fees are going to go up quite a bit. And then, yeah, as I mentioned earlier, DLCs, Oracle's prediction markets, and more broadly speaking, making Bitcoin more programmable is exciting. But yeah, I think that ultimately, Bitcoin as a store of value is really just a lot more exciting than anything else going on.
I love it.
I feel you. And, even if the Lightning Network wasn't a viable option, I think it is. I agree with you. But even if it wasn't, I could still see the Bitcoin price going up just for its store of value properties.
Yeah, there's any number of ways to scale Bitcoin. So, on layer 2, Lightning is the non-custodial scaling option. And obviously I favor that. And I think users will favor that as well because of its intrinsic properties. But there's also custodial scaling options, right? All of the exchanges are custodial layer 2 scaling solutions, where you can send Bitcoin from one user of the exchange to another user of the exchange without hitting the chain. And so I think that, and even Visa is currency agnostic. Visa does US dollars, Visa does euros. They could do Bitcoin if they wanted to, if there was demand there from users. And so that's also a layer 2 scaling solution that's custodial. And so, even without non-custodial scaling solutions, Bitcoin would still have custodial scaling solutions. And ultimately, Bitcoin would still succeed with custodial scaling solutions because the alternative, right, of using a different cryptocurrency with a non-custodial scaling solution, that's a logical impossibility. Because if you can have a non-custodial scaling solution for another cryptocurrency, you can also have it for Bitcoin. So it's a catch-22. All these things are open source.
Right. All right, cool. Well, let's get into it. We come at cryptocurrency from the point of view as a regular people trying to figure out, and you have opinions on Ethereum. Some would call it FUD, some would call it tough love, some would just call it, you're just talking about the facts. What is your opinion on Ethereum for those who don't follow you on Twitter?
Yeah, so I guess from first principles, Bitcoin and Ethereum and all the cryptocurrencies are ledgers, right? So broadly speaking, they will be described as digital ledger technology. And so my background is accounting. I have a bachelor and master in financial accounting. So I know a lot about ledgers. And I know a lot about auditing ledgers. And the first thing you do when auditing a ledger is kind of making sure that the beginning balance reconciles with the ending balance. So you look at, okay, what was the opening balance for the ledger? What were all of the changes made, right? So all the transactions, all the debits and credits. And does that all add up to what we're thinking should be the ending balance of the ledger, right? So that's very easy to do in Bitcoin. I say that, yet is it actually easy? I mean, it depends on your point of view. It's 400 gigabytes of data. The summary information, or the let's say the tabulation of the transaction, so adding up all the debits and credits, that didn't exist until this year as open source code, right? Maybe some people had proprietary code, but it didn't exist as open source code until this year, when CoinStats Index was added to Bitcoin Core. And then there was not, before this year, before I did it, there was not a reconciliation of all of Bitcoin's issuance to Bitcoin's current balance, which in technical terms is called the UTXO set. So what are these spendable coins that users have on the Bitcoin network? So this took, it took a lot of work, but ultimately it was feasible and it was doable. And, I was able to prove out that there have been no Bitcoin accidentally deleted or destroyed that we don't know about. And there have been no Bitcoin that have been created that we didn't know about either. And so it all proves out to a total, reconciliation of zero. Just as an auditor, that's, okay, that's very satisfactory. And for Ethereum, the starting point of this was when an Ethereum influencer called Eric Wall, I think is his name. He was saying that Ethereum users are far more intelligent than Bitcoin users. And so Michael Goldstein asked him, how do Ethereum users add up the total supply of ETH? And the only response that was given by Vitalik, of all people, was that they go to a proprietary data provider, a block explorer, running proprietary code that's not open source, that nobody knows how it works in the back end, other than the people who work at that company, and that they look at this number and that this is their total supply, which was pretty shocking from a Bitcoin perspective, that that's their solution. So the Ethereum people quickly figured out how to write an open source solution so that they could add up the supply without going to a block explorer. But this only adds up the current supply. It doesn't do what the auditors are looking for, which is reconcile issuance, right? Reconcile how the Ethereum created to today's supply, and show, okay, here's where Ethereum were accidentally destroyed, or here's where Ethereum was accidentally created, and proving that out to zero. So that's something they still have not been able to do. And it's understandable why they're not able to do it, because in Bitcoin, it takes up, gigabytes. In Ethereum, it takes up terabytes. And so to be able to do this, you got to have serious hardware. And you also actually have to have pretty good, even more sophisticated software engineering than with Bitcoin. And so nobody's been able to do it to this day. People think it's FUD because they don't understand financial accounting or auditing, and they don't understand digital ledger technology. And so that's fine, because really it's an expertise, right? It's a profession. But they really shouldn't, they should stay in their lane, right? They should shut up because they don't know what they're talking about. And really what we need to see is the whales, right? The Joe Lubin's, although I don't know if Joe Lubin is still a whale. He might be super poor at this point, with what's going on, burning all of his money on consensus. But whoever has Ethereum, apparently some people still have some ETH lying around. If they want people to take their digital ledger technology seriously, they should actually have the capability of reconciling their ledger. And the reality today is that Ethereum is not auditable. Its ledger cannot be reconciled. And all of the Ethereum influencers are living in complete denial. They say that they don't need to reconcile it. They don't need to audit it, which, as an auditor, anytime you hear someone say, oh, we don't need to audit that, that's an immediate red flag that you absolutely do need to audit that, right? If you don't need to audit something, then generally what people will say is, that is trivial to audit, and we have done so, and here's the proof, right? And so there's not really anything to hide. But anytime you hear that we don't need to audit it, it's impossible to audit it, and don't even try, that screams that there's, skeletons in the closet. Now, I don't know what the skeletons are. I don't own any ETH, so I don't have any ETH to pay these developers to do their jobs. And really the bizarre thing to me is that Ethereum raised a huge amount of money for software development, and they weren't even able to implement this very simple feature, and they don't even think anyone needs it. So I don't know. It's a strange culture. But the other argument they make is that Ethereum is not digital gold, and so you don't need to know what the Ethereum supply is, which to me is okay, that's fine, but they still think that it's a ledger, right? And so it doesn't really matter if it's a ledger for oil or if it's a ledger for gold. Ledgers are ledgers, right? They start out with an opening balance, they have debits and credits, and then they have an ending balance. And it doesn't matter what the underlying asset is, or whether you think the underlying asset should be scarce or not. That's kind of neither here nor there. Ultimately, it should be transparent.
So interesting. So Ethereum, to kind of sum up some of the stuff, Ethereum, hard to verify, hard to run a node, trending towards more centralized, cannot be audited. Do you think Ethereum has a future, or how do you see it playing out?
Yeah, I think that Ethereum does have a future, for sure. And really, it's about how big will Ethereum's future be relative to Bitcoin's, right? I think that's kind of the question that the market is asking itself. And so if you're watching the markets, like I tell people, don't look at the dollar value of Ethereum, right? Because the dollar is always inflating. Look at the ratio between Ethereum and Bitcoin, right? And Ethereum, that ratio has not improved between 2016 and today, right? That ratio is where it was in 2016. And so despite, the ratio improved a lot in 2017, 2018, but then it collapsed back and it retraced all the way back to where it was in 2016. And so what that means in economic terms is that there was zero fundamental value accrual for Ethereum relative to Bitcoin over the course of the past 4 years. And so people took on huge amounts of risk owning ETH and earned zero return in Bitcoin terms. So I think that, that's the way to kind of look at it. And if it is the case that Ethereum is going to have zero value accrual relative to Bitcoin, then it doesn't make any sense to hold any Ethereum. You should just hold Bitcoin, right? Because you're decreasing your risk without affecting your returns.
Totally, and I totally agree with Ethereum or any coin versus Bitcoin is what you need to look at. And I I see your point and Bitcoiners' points on the future of Ethereum. In 2021, maybe I'm foolish for thinking this. It seems to me that it is setting up to go on a run. It seems like the narrative is just as strong, if not stronger, compared to 2017. Despite your best education, it seems like Ethereum is getting locked up, which is taking supply off the market. Do you think in 2021 it will do well?
Sorry, what was the first part of that?
It was well, I talked about.
You mean Ethereum 2.0 and getting locked up in
I'm just talking about
the
the value of one Ethereum, the price of Ethereum. It seems to me that everything that made it.
I guess, what do you mean by locked up? Are you talking about like
in the DeFi as collateral?
Okay, yeah. So so I think that the trend of DeFi and of using Ethereum as collateral, and frankly, goes for Bitcoin as well. Bitcoin being used as collateral. Is reflective of what's called a carry trade in finance. And so a carry trade in finance is when you borrow a weak currency in order to buy a stronger currency. And by a weak currency, what I mean is a currency that frankly has a lower interest rate, right? And then the stronger currency has a higher interest rate. And so then you earn the interest margin between those two currencies. And then you are also vulnerable to the currency risk, right? So obviously the value of the currencies are fluctuating as well. And so why is there a carry trade happening? And here I'll very broadly say between fiat and crypto, because as much as it pains me to say this, while Ethereum is unauditable in its supply, don't even get me started about USD. Okay, that's like 10 times worse than Ethereum. Okay, you can't even run a USD node, right? Like that's nobody runs in a USD node, not even the Federal Reserve. It's a very absurd situation. But anyway, billions of dollars disappear into black holes all the time. There's a lot of corruption, far more corruption than in Ethereum. But anyway. So because even Ethereum and because Bitcoin are sounder money than fiat, it makes sense to borrow fiat and use crypto as collateral, to use Bitcoin as collateral, or even to use Ethereum as collateral. And so whether you do that in a decentralized manner or in a centralized manner, that's just an implementation detail, right? That doesn't affect the fundamental economics of what's going on. That's just, it's like, it's okay. That's not, it doesn't change the fact that the collateral is locked up, quote unquote, from an economic perspective. And so how that looks, actually, it can also look like BitMEX, right? It's all about building up leverage. And so whether it looks like a centralized platform like BitMEX, or it looks like a decentralized platform like, Maker on Ethereum, those are implementation details. The fundamental economics of it is that there's a carry trade going on, and we're going to continue to see that amplify. Now, what form is it going to take? I don't know. I'm pretty agnostic onto it. I think that because Bitcoin is better collateral than ETH, that we're going to see Bitcoin be used as collateral within the Ethereum ecosystem. And we're already starting to see bridges being built like that. Now, I think that Bitcoin is going to be used as collateral everywhere because it's the best collateral. And that's kind of, the trend that's going to happen. Now, it's also going to come in waves. So when Bitcoin's value is going up, it makes a lot of sense to borrow against it, right? Because the collateral value is increasing and the risk is decreasing for the lender. And in reverse, when the Bitcoin price is going to inevitably crash, all of this leverage is going to get liquidated, right? All of the leverage that's not sustainable is going to get liquidated. And we saw that in March 12th, right? All of the leverage that was unsustainable got liquidated. But that doesn't mean that that the price goes to zero or that the leverage goes to zero. It just means that people who are being too aggressive with borrowing, they get wiped out. And I think that's going to continue to grow. I hope that we're able to do more of it on Bitcoin, not because I'm ideological about everything being built on Bitcoin, but for the pragmatic reason that if you were able to lever up on Bitcoin using, for example, Bitcoin price oracles, then you're able to have a more trust minimized setup than if you have to wrap the Bitcoin and trust a centralized custodian like BitGo with doing that. So it's kind of, but these are implementation details, really. They don't change the fundamental economics of what's going on with the carry trade.
Right. And I totally see your point as far as like Ethereum is, long-term future. It seems to me that in the short term, maybe the next year, people don't care about not being able to run a full node or any of that stuff. For instance, I don't know, like Raoul Paul coming out saying he's interested in Ethereum. I saw Tur Demeester on a podcast, on the Masari podcast, said, I might get in trouble for this, but I do own some Ethereum because I don't want my personal views to, get in the way of a good trade. And even maybe you can shed some light on this. I saw Kraken was looking for an Ethereum evangelist to go on TV and talk about Ethereum and also keep Kraken in tune with the good, quote unquote, projects in Ethereum. So it seems to me like Ethereum in 2021 is going to be speculated on hard. Any thoughts?
Yeah, I think that all depends on what the new money entering into the space is going to be interested in. In 2017, the idea of having programmable smart contracts and ICOs was very attractive to new people coming into the space. And so that's why a lot of capital went into Ethereum. In 2020, I don't think that narrative exists anymore, right? I don't hear about the JavaScript software developers who are excited about Solidity. That kind of got played out. And there's maybe that'll change. But right now, I don't think that that's why people are interested in crypto. If we look at what rationale is the new money coming in for, right? What is their stated rationale? It's because they want to have a scarce asset. It's because they want to own Bitcoin, right? So we haven't seen any Paul Tudor Jones equivalent say, hey, look, I'm really excited about World Computer. That's why I'm getting into Ethereum. We haven't heard anyone say, hey, I'm really excited about stable coins, and that's why we're going into Ethereum. It's just not a thing. Maybe that'll change, but again, I think that we have to look at what is the new money interested in. If ICOs had been successful as a whole, right, then I think that the new money would still be interested in ICOs. But because ICOs were fundamentally flawed in their economics, right, where there was zero accountability and people were just, able to squander all this capital that they raised, because ICOs were flawed, their narrative fizzled out. And so narratives that are not sustainable, narratives that are not based on economic fundamentals, what they do is that they don't survive the bear markets, right? They have a hype cycle, but they revert to their fundamental value, which is zero. And that's why Ethereum had zero value accrual through that hype cycle, is that the fundamentals of its narrative were vacuous. They were non-existent. And so now what we have to look at is, are the fundamentals of this new narrative, right? Okay, so let's just take DeFi, for example, or NFTs or any of these others. Is there economic substance to them? I think that no. And specifically because I don't think that the value capture mechanism exists, whereby value creation from DeFi or NFTs trickles down into ETH. I don't think that value capture mechanism exists. It's a fantasy. And so it either gets burnt by miners, right, through transaction fees, which we're seeing a lot of. So, okay, that's fine. I don't have anything against that. But that doesn't mean that it's getting accrued by ETH holders. Or it's getting diluted out by the massive amount of ETH issuance that is occurring, right? And Ethereum influencers don't want to talk about the dilution, which is continuing and will continue until some future date, which we don't have on the calendar, but eventually some future date where we move to proof, or where Ethereum moves to proof of stake, and magically the dilution will be dramatically reduced, and Ethereum will become, competitive with regards to its issuance policy. Now, even if that were to happen, I still think that there are structural problems in the Ethereum market where the amount of ETH held doesn't have the accumulation and distribution cycles that Bitcoin has had with the HODL waves. And so what the HODL waves are bull markets that have redistributed coins from OG hodlers to new hodlers. And we've had several of these cycles happen for Bitcoin already. I think it's like 4 or 5. We've had one cycle for Ethereum happen, right? And the end result was pretty ugly for everyone involved. Whereas Bitcoin cycles have actually been beneficial for everyone involved, and it's more of like a relay race of handing the baton to the next holder. Whereas with Ethereum, it was more about the founders dumping on naive retail speculators at the end of 2017 and them never recovering that value.
I totally agree that with you on that thought that, Bitcoin gains value year after year or 4 years after 4 years. Every altcoin loses value versus Bitcoin given enough time. So you don't want to be holding on to that. I hear some Bitcoin maximalists. Is that a correct term? Do you prefer Bitcoin minimalist like Dan?
Yeah, so Bitcoin maximalists basically think that everything should be built on top of or built inside of Bitcoin. And I like Dan, I reject that view because ultimately I don't think that Bitcoin, I don't think that Bitcoin can grow to fulfill its full potential if we expect it to do everything, which is kind of counterintuitive, right? People wonder, okay, well, why? What do you mean by that? In order for something to reach its maximum potential, you actually have to constrain what it does. And so this applies in software. It applies in nature as well, right? Ask any good gardener. They'll tell you that in order for a tree to reach its full potential, you have to prune it. And so you can't just say, okay, well, this tree is gonna grow apples, but this tree is also going to be a lawn, and this tree is also going to be an aircraft carrier, right? The notion that you can have one thing of unbounded potential and that it's going to grow to be everything, that's fantastical. It's childlike. The reality is that in order for something to reach its full potential, it has to be hyper focused. It has to be hyper constrained in its capabilities, and that's how you have an asset really grow. And so that's why, to me, it makes a whole lot of sense to minimize what Bitcoin does. So Bitcoin doesn't do Turing complete, Tamagotchi, CryptoKitty stuff, right? You can do that in a SQL database. You don't have to do it in Bitcoin. And so that's where I really am a Bitcoin minimalist.
Cool. Well, I hear some Bitcoin minimalists, not anybody I mentioned, or even we'll just say Bitcoin maximalists. I hear some of them say that Ethereum is a scam. Is that accurate? Why do some people think that?
So I think the reason that some people think that is that the marketing around it has been duplicitous. And what I mean by being duplicitous is that people like Vitalik have a tremendous amount of confidence about Ethereum's roadmap. And they have had this confidence from day zero, which is wonderful, right? Okay, that's great to have confidence in your roadmap. The problem is that people are putting in their life savings into a product roadmap and an engineering roadmap. Whereas Bitcoin has the opposite approach. Bitcoin says, hey, look, there's the roadmap, turn around and look at the roadmap. And what I mean by that is look at what already exists. Look at the system as it is today. That's what you're buying, right? And that is fundamentally different. That's a fundamental difference between Ethereum and Bitcoin. Now, does that mean Ethereum is a scam or not? I think that it depends on your definition of a scam. To the extent that the roadmap for Ethereum is so far behind schedule and so unrecognizable from its initial marketing that it has really been a bait and switch. I think that's a better way of describing it than a scam. But that to the extent that the roadmap was communicated with such confidence and certainty that was unwarranted, and that the people communicating this roadmap ought to have known better, or perhaps did know better and intentionally miscommunicated and misrepresented, and perhaps materially misrepresented the state of Ethereum and its future with the specific intent of inducing someone to buy ETH. Well, that's fraud, right? That does fit the definition of fraud. Now, ultimately that's kind of for a jury and a judge and a trier of facts to determine in the court of law, right? Because these are legal terms. And so scam is not a legal term, right? But usually when people say scam, what they mean is fraud, right? Which is material misrepresentations with the specific intent of inducing someone into taking a certain course of action, which ends up costing them, right? Which ends up harming them. So that's why we have legal systems to adjudicate disputes like this. So ultimately, I don't think that we should call something a scam unless it's had due process, right? Unless we've done depositions, we've done subpoenas, we've unearthed all of the evidence, we have allowed the defendant to face their accuser, and that we've had a trier of facts look at all of this, whether it's a jury or a judge or a panel of judges, and that it's been fully appealed. And that's when we can finally say, okay, this actually was a fraudulent scheme and these people are guilty, right? I don't think we should assume guilt. And so that's where I think we should be hesitant to say it's fraud. Now, because the word scam is kind of a layperson word, it's not a legal word, and it's kind of in the court of public opinion, that's kind of a different story.
I love this perspective. And I know we have only maybe 5-8 minutes with you left. Do you mind taking a few audience questions?
Oh, yeah, absolutely. I don't have anything immediately behind this.
All right, perfect. Nice. So feel free to answer as much or as little as you want, your call. Do you think we'll have a US digital dollar in 2021?
Yeah, this one's a weird one in the sense that we already have a digital dollar, right? Everyone uses the dollar for e-commerce at this point. People even credit cards have been fully digitized thanks to Apple Pay. So that part's fully digital. Will the Federal Reserve create Chaumian eCash, right, where you can? I think when people say digital dollar, what they mean is digital USD cash, right? And I don't know. I don't know that they will ever do that. I think that there's not really any reason for them to do it other than marketing. And I would go so far as to say that that's probably a scam, to go back to our previous conversation. Because look, dollars are issued by the Federal Reserve, so there's just no getting around that. And the Federal Reserve is centralized. Dollars are not issued by a decentralized network like Bitcoin, and so it doesn't really make sense to me that the central banks would try to change that. And decentralize themselves, essentially, which is that's what a non-scam dollar would be like, right? Of, okay, everyone, you can now go to github.com/US dollar, and you can download the source code for your US dollar full node, and everyone can run this and it's decentralized, right? Like, that's never going to happen.
But we are seeing China like do their CBDC.
Yeah, I mean, that's a scam though, right? Like, you can't download the source code for their CBDC. So they're just trying to scam people with another scam ICO, right? It's just another, and really, to me, it's worse than a shitcoin, because at least most shitcoins are open source. These are proprietary altcoins, right? And I don't see any future for them.
I heard the China CBDC wasn't even on a blockchain, so who knows?
Yeah, and then it's like, okay, they're just playing semantic games in order to mislead people, which is not cool.
Right. Okay. Well, I mean, we have all these audience questions. I kind of feel like we answered some of them about Ethereum.
Well, how about this one? Could you explain, because we have a lot of new investors on our channel, we'd like to speak to the whole market. Can you explain to us non-technical people how proof of stake works, pros and cons?
So basically the idea is that you instead of buying mining rigs, right, for proof of work, you put up your Bitcoin, or you put up your ETH, or you put up whatever underlying asset is in this protocol, and you lock that up. Now, there's so many problems with it that they've had to create all sorts of game theory workarounds. And so the complexity of proof of stake is ever increasing in its, whether it's slashing or all of these nuances. And so, to me, it's all about Lindy. So show me a proof of stake system that works for a while, and I'll look at it. But until that happens, it's kind of, to me, it's like saying, hey, look, here's what we were doing before proof of work came, right? Because that's how the US dollar works. The US dollar is a proof of stake system. And so they're saying, okay, here, this is the consensus mechanism we should use. And it's better than proof of work, but they're not really showing any outcomes that are better than proof of work. And this is, I think, this is where a lot of shitcoiners get lost, is that ultimately what you have to do is have a better outcome for users. If there is not a better outcome for users, users will never adopt it. Users don't care about ideology. Users don't care about making you rich. Users care about, are you improving things for me? Are you creating value for me as a user? And because so many projects don't create value for users, they have to try to find ways of either bribing users into getting into it, right? So they'll do airdrops, do things like that. They'll do, hey, if you learn about our altcoin, then we'll give you free altcoins, right? Like that's what earn.com is doing. Yeah, exactly. Which to me is like, okay, that's proof that you're not creating any value for users because you're having to bribe them. And that's where, to me, proof of stake really falls apart, is that it's not creating value for users. All it's doing is, first of all, further monopolizing or centralizing the token issuance, right, which was already centralized with all these altcoins. and then further diluting the holders of the coin, right? With the creating new rewards for the staking, as they call it. Now, the other part that's weird is that with proof of stake, you're actually competing with other borrowers of that currency. And so you're creating a weird like conflict of interest. Whereas with proof of work, you're actually, because you have to buy mining rigs, it's a completely different market and it's not circular. So I don't know. I wish them luck, but I'm very skeptical of their whole approach to trying to come up with an alternative to proof of work. And usually it's premised under the idea that that proof of work is bad or is not creating enough value for users. And there's zero evidence for that.
Yeah, I agree. And to the proof of stake, it's all so experimental in terms of the delegated or all these different options that they're trying, that it's just hard for me to be like, oh, well, this is investable, because it's hard for me to acknowledge that just because it's so experimental, that side of the space.
Yeah. Well, I wish them luck.
I had one more question, because you work at Kraken. I'd love to hear your elevator pitch for a new coiner. What does Kraken bring to the table?
Yeah, so I think Kraken's strength for retail users specifically is in Europe, where you're able to now instantly send euros from your bank account to Kraken and convert it into Bitcoin and withdraw it to your own keys, to your own wallet. And so that's really the value prop, and combine that with unparalleled customer support and excellent liquidity, so you'll have great execution on your buy. That's the huge advantage for Kraken.
Cool. Who do you think the Ethereum evangelist, if Kraken does hire one, do you think it's going to be Eric Wall, your buddy?
Yeah, that's a role we're still hiring for. So if anyone listening is interested in it, definitely DM me, and we'll try to get that going. But
they can DM you.
Yeah. I mean, ultimately I'm looking for someone to work with, right? Because I'm not like someone who's going to I don't know. There's kind of this myth that like Bitcoiners want to like destroy Ethereum people and like eat them alive or something nefarious like that. No, I'm interested in people with different perspectives and arguing with them. The people I really don't like are the people who don't have good counter arguments. Those to me are insufferable, right? The people who come back with fallacies or with implausible or with just insults, right? No, come back with a good counter argument, and then we can have a conversation. And I know that there are people like that in Ethereum, but we're having trouble recruiting it. So if you have any referrals or anything like that, send them our way.
Cool, totally.
I love it.
Pierre Rochard, his links are in the description. Follow him on Twitter. Check out his website. Pierre, any final thoughts? Because thank you so much for coming on today.
No final thoughts. Thanks for having me on. And go onto Twitter. Follow me at Pierre_Rochard. And my DMs are open if you have questions or comments or feedback. Always happy to talk with people about Bitcoin.
Long Bitcoin, short shitcoins.
I don't know about shorting shitcoins. They can still pump. But long term, I definitely think buy and hold Bitcoin is the best way to go.
Totally. Cool.
I love that.
Thank you so much.